Bitcoin. And the final one, Bitcoin, not crypto. Dale Warburton, please take to the stage for your talk this morning. Bitcoin, not crypto. Come on down. Do you want this?
Thank you. All right, cheers. Hello, hello. All right. Where are the slides there? Okay, let's get cracking. I wasn't given a demo. Okay. Guys, my slides are not, oh, there we go. All right. So today I'm going to be speaking about understanding why Bitcoin, not crypto. Fundamentally, I'd like to help distinguish Bitcoin from crypto. I'd like to just also say that I am so stoked to be here speaking about Bitcoin in front of a Cape audience. Like, even though I live in Australia, I have to say I am always an African, and I'm so proud of the team and for everyone coming through today. So thanks so much. There we go. All right, so at a high level, what would I like you to take from today's session? Because I'd like you to get something tangible. I'd like to create some sort of mental model or framework that you can then assess future crypto projects, and you can actually then look at Bitcoin as opposed to crypto and distinguish the two. And I think that will then empower you to make better investment decisions. At the end of the day, this may sound harsh, but I don't care what you do with your money. It's not my job to tell you what to do with your money. I'm a freedom maximalist. I believe people can do whatever the hell they want with their money. It's their money after all. It's your stored energy, but I say know what you own and why you own it. And I think if you understand how crypto works and you still want to invest in it, that's absolutely fine with me. But my goal here is to educate you. All right, so just a quick TLDR, or too long didn't read, as to who I am. I'm a former commercial attorney. I did my articles here at Cliff Decker Hoffman around the corner. I then spent a decade or so in real estate. In 2020, during the pandemic, I came across Bitcoin for the third time. My friend who actually told me about Bitcoin for the second time is here today, and I ignored her. And in 2020, there was a whole confluence of events that led me to actually discover Bitcoin, as it were, for the third time. I saw what was happening on the macroeconomic front. I saw governments printing endless amounts of money. They shut down their economies. They placed their citizens under house arrest. And yet they were just printing money. And debt to GDP was sort of through the roof. And I thought to myself, well, if governments can just print money, then what are we doing paying tax? That led me down the whole path of what is money. And then I was like a full-blown Bitcoiner. I wanted to make a big allocation. I did a Bitcoin thesis because I was like, I need to justify making a massive allocation. And then I was like, I want to work in Bitcoin because I love it so much. It's not just the number go up. I think it's the investment opportunity of a generation, but it's also freedom go up, because I looked at things like CBDCs, which are 100% in the pipeline. I looked at what was happening in Australia and Canada, where financial institutions were giving governments information about what you were doing with your own money. Like if you went to a protest in Australia against the lockdowns and you swiped your card because you wanted to buy Coke, they could actually identify, oh, Dale went to a protest. And I was like, I want FU money, man. And so not only number go up, but I want freedom go up. And so I love Bitcoin. I want to work in it. Well, it's not easy. You've got to put in proof of work. And so I found my way into crypto media. And I was very fortunate. Like, I never got really swayed by the crypto narrative, but everything I learned in crypto media really just kind of reinforced my belief set around it. And so I saw how the sausage was made. The crypto sausage was made, so to speak. And it really kind of blew my mind and made me even more of a toxic Bitcoiner. Finally, I escaped the claws of crypto media in the fiat world and found my way into Bitcoin podcasting, which I started last year. Best thing I've ever done in my life. So rewarding, better than all my other previous jobs combined. And yeah, I'm really excited about where it's going and what it's about. And effectively, it's a weekly show where I help people understand the difference between Bitcoin and crypto. And although I'd like it to be more focused really just about why Bitcoin and not necessarily why not crypto, if you like. All right, before I get going on the distinction, this is one of my macro heroes, Lynn Alden. She's absolutely magnificent, and she says that if you conflate Bitcoin and crypto, then you don't understand either. And I don't think there's a more sort of eloquent statement than that. All right, so what we're going to do is we're going to just do, as the Americans would say, we'll start at a 10,000-foot view, and I'm just going to cover what Bitcoin is, and then we'll talk about what crypto is, and then you can kind of see what the differences are and the incentives. So I know this has been discussed actually yesterday, but Bitcoin is best conceived as like a digital commodity. It's sort of, you've heard this before, it's digital gold. VJ Boyapati would talk about it as gold that you can teleport. Michael Saylor would say that it's a sort of synthetic pharmaceutical grade type of digital gold. It's no different to other types of commodities: lumber, steel, wheat, iron ore, pork bellies. The key thing is there's a cost of production. There has to be human capital, financial capital, physical energy that goes into the production, refining, manufacturing, processing the commodities. Another way is as money. You've probably heard this. So it's apolitical, stateless, neutral, censorship-resistant money that's native to the internet. Or you could look at it as a protocol of value. We've got TCP/IP, the protocol of information for the internet. We've got SMTP for email, and Bitcoin is really just the protocol for value for the internet. It's open, it's permissionless, and it's fundamentally opt-in. It's not imposed upon you. The important thing is that Bitcoin is a bunch of characteristics that, there's no central leadership or management team. There's no marketing or PR departments, there's no company behind it, and there's no single entity or group of individuals that can influence the monetary policy in terms of the rate at which new Bitcoins are created or the fixed cap supply, and there's nobody who can change the rules. We can't say, hey, we're going to double the block size, guys. We're going to actually now go from 21 to 42 million Bitcoin. Like, that's just not going to happen. That's just not how it works. Bitcoin is like bedrock. It's like the Constitution. It can change, but it's really, really hard to change. And there's no single entity that can do that. Importantly, there was no pre-mine, and this is what makes it very different to crypto. Satoshi didn't just get together with his cypherpunk mates and say, hey boys, I've created this money, let's just allocate ourselves sort of 50%, and then we'll just do a little launch, and then we'll work with some PR agencies, and then we'll pump this thing up. It didn't work like that. He actually had to expend physical energy. It was like, not a lot, I mean, it was a CPU power, but that's how he started, and then eventually became more competitive, GPU power, and then eventually we've got ASICs, and that's where we are today. So it was a really fair launch. Nobody had an inside advantage. And this is not my opinion, some sort of pleb here. This is the opinion of the most important regulators in the world, the SEC and the CTFC. They've said very unequivocally that Bitcoin is a digital commodity. We also know that Bitcoin now has sort of crossed the chasm, if you like, and it's been financialized by having all these ETF issuers, the BlackRocks, the Fidelities of the world, and they've all embraced Bitcoin to a lesser or greater extent. Fidelity actually wrote a really great seminal piece in 2020, which was Bitcoin First, and they then subsequently have said in 2023, Bitcoin First Revisited. Amazing work, and it just says, look, when you're going to evaluate these things, not making any judgment on either, they fundamentally are different. It's like chalk and cheese. They're not even the same species. All right, so now we've covered what Bitcoin is. Let's talk about what crypto is. All right, so the way I like to think about crypto is really they are stocks or shares in early stage technology companies. You might have heard the term unregistered securities. It's unregistered in the sense that it's not registered with any sort of regulatory body, and securities in the sense of it's a bit of a more complex legal definition, but basically shares or stocks, okay? Importantly, they have 24/7 mark-to-market pricing and liquidity, meaning there's a price for every single second of the day, and you can buy and sell every second of the day. But here's the kicker, and this is what makes it really important. There is no need for a product market fit. It doesn't actually have to solve a real problem, unlike normal companies. In order for them to exist, they actually have to have a problem and customer base that they're serving. Not quite the case when it comes to crypto. In fact, my view is that, and this is a totally made-up stat, 99.95% of crypto is purely there for the benefit of the early investors and the founders. 99.95% are just frauds, scams, Ponzi schemes, and some or other guys, and very few have utility. And I will draw your attention later to an area where I think they might have some utility, for now, but not necessarily in the future. So if we look at some of the characteristics of crypto, with very few exceptions, there's a central leadership or management team. You might have heard of Joe Lubin and Vitalik Buterin. These are guys who created Ethereum, very clearly identifiable. You could look at them as shareholders and directors of Ethereum, the company. Marketing and PR departments, crypto companies have those. So I've seen literal PR adverts on listed job sites for Tron. So Tron doesn't make any sort of claims that it's actually anything but a company, and that's evidenced by the actual job ad. With crypto, there is typically a group of individuals that are capable of changing the rules and changing the monetary policy. So Ethereum is a perfect example of this. When there was a hack in 2015, it was ultimately up to the Ethereum Foundation to decide which of the chains is the true state of affairs. And they decided to go for the one that wasn't hacked. They thought this is the proper one. And now we've got Ethereum Classic and we've got Ethereum. We also know they shifted from proof of work to proof of stake. They changed the rules. So they basically rugged the miners. And they said, but also, guys, we're deflationary money. So we are quote-unquote ultrasound money. So we are burning Ethereum at the same time. So they changed the monetary policy. Obviously not quite self-aware to realize that we've got fiat. We don't need a system with rulers. We need a system with rules. But, that's a side point. The important thing as well with crypto is that there is almost always an initial token allocation, like a pre-mine. They give themselves a bunch of shares, effectively. And there's a pre-sale. They work with venture capitalists, and the venture capitalists give them funding, and they get shares at a discount. So in the case of Solana, even though it does absolutely nothing, let's say, I don't know what the price is, but it's been up to 260 US before, the early investors got in at 20 to 80 US cents. The important thing about crypto is that the cost of production is approximately zero. There's no work involved. You can literally, it's just like digits on a screen. You can just increase or decrease the supply because it's not tethered to reality like Bitcoin. If I want to buy Bitcoin, if I want to acquire Bitcoin, I can do it in two ways. I can go and buy it on the open market, peer-to-peer, or on an exchange, or I can actually go and mine it, and I can point my energy towards a mining pool with the hope of winning some Bitcoin. I mean, that's literally how it works. With crypto, it's not quite the same. And again, this is not just my opinion. This is the opinion of the SEC and the CTFC. The current chair, Gary Gensler, is super hostile towards crypto at the moment, and they've got court cases against Coinbase and Kraken, two of the biggest exchanges, for selling unregistered securities, which are basically unlisted shares. And again, the likes of Fidelity and others, they haven't created an ETF for Ethereum or Solana or anything like that. It's really just Bitcoin first. So, the bottom line is you've got Bitcoin on the one hand, which is like money. It's a commodity. As Lynn Alden would say, it's a commodity money. And then you've got crypto, which is basically early stage venture capital technology. So you might say, like, what's the problem? We can have different solutions for different problems. Why are Bitcoiners such toxic maxis? Like, why are we so snotty about this? Why is Dale so dickish about, crypto? And I'm like, well, I think that they are digital snake oil salesmen. I think they're selling like the sort of blockchain equivalents to penny stocks. And because these are companies that don't have value. There's no prospect of success. There's no revenue. There's no customers. There's no there, okay? I think it's essentially a game for insiders. It's unfair, it's unethical, and illegal. Now, why do I say these? These are quite extreme statements, it might sound like, but there's two things about crypto that I object to. The one is sort of information arbitrage. They know stuff about the project and how it works that you as a retail investor don't. That if you were to know, it would be a material fact, would impact your decision as to whether or not to invest. Normal markets have disclosure requirements. Not quite the case when it comes to crypto. And so from a regulatory arbitrage too, if I wanted to go and create a property fund and raise $100 million and we're going to invest in a bunch of properties, just think of all the legal hurdles I'd have to jump through and the financial services licenses I'd need in order to go and market to the public and go, Dale Warburton Property Group, we're going to invest in all these different things. I'd have to jump through a million hoops. But if I called it like Dale PropTech Blockchain Dream, I could just raise capital from across the world with zero regulations. And so there's really regulatory arbitrage and information arbitrage. So the game of crypto is actually, it's a VC playground. And something that I've talked about quite a lot is it's like a panacea for VCs. So, venture capital is like a really hard game. You make a lot of different investments. The vast majority fail. If you're lucky, the best way that you can actually realize profits in the end is either by selling the company to somebody else, or you could actually IPO and go and list it on a stock exchange. There was a very long time to liquidity there. So there's a lot of execution risk, and there's a very long time to liquidity. Like this might take 5, 7, 10 years before you can finally exit your position. Not quite with crypto. So let me just sort of give you the sort of 7 steps to getting rich if you're a crypto promoter. The one is create a token, okay, to solve a problem, real or perceived. The more, I suppose, emotive the problem, the better. You've got to tackle things like climate change, inequality, whatever the topics are of the day, whatever you can leverage in sort of the corporate press to get more attention, that's better. It doesn't need to be real. That's the important thing. Then give yourself a bunch of tokens. get some investment from venture capitalists. Okay, so now you've got some cash. Work with PR agencies and the advertising agencies that are affiliated with the venture capitalists, because guess what? They've got other businesses, so they'll do nice deals for you in terms of being able to market it. You get the PR agencies to draft up press releases, send it to the crypto publications like the ones I used to work for. Now we've got to dress this PR release up as news, some sort of groundbreaking change. We say, hey guys, we're also going to do airdrops. Get in early. So this is like now signaling to retail. Get in, get in. Then what we do is we use some of the proceeds from the venture capital investment that we got in the first place, and then we use that to pay the likes of Binance and other shitcoin casinos to list, because that's a revenue stream for them. You have to pay to play, and so that's what we got to do. Now the token is available on there. I control the majority. And guess what? As Corey Clipson would say, we can make our own weather. We control the majority. We can change the rules. We can do whatever we like. We can work with our agencies now, and we can pump this thing, and we can strategically dump whenever we want. We can buy, we can sell, we can go short, we can go long. We can fundamentally manipulate the price at the expense of retail. So the problem really with crypto is that you effectively can IPO, or an ICO, initial coin offering, without ever having to create something of value. And that's what's quite ironic about it. You never have to worry about compliance, pesky compliance with capital markets requirements that ordinary companies do, because you don't have to make disclosures about who owns what. You've got a short time to liquidity, so you can literally create a token. 3 months later, you can dump on your retail investors. And you can just manipulate the price up and down because you control it. As a result, investors get wrecked. You also, the other problem with crypto, and this is quite ironic, is it's just littered with false advertising, in the sense that you don't actually need blockchain to solve any problems beyond that of money. It's a very inefficient, slow database structure that otherwise is completely inappropriate for everything other than money. And unfortunately, what they've done is they've actually just said, well, you know what? Blockchain's the innovation. No, it was actually created in the 90s, and there was no commercial application for it. The only reason that they're using it is so they can create a token, so that they can then manipulate that token price. They talk about something being decentralized. Well, in order for it to be decentralized, you need to be able to run a node, which means you can run a full copy of the blockchain from day dot. Okay, so you can verify for yourself. Well, if you want to talk about Ethereum, you need 32 ETH to run a node, and they want to double that and triple that. Think about all the hardware requirements you need to do. Plus, half of their servers run on Amazon Web Servers and Azure. So at the end of the day, if they want to shut down, the US government could shut Ethereum down very easily. And so in that sense, they're not decentralized. In Bitcoin, we talk about Dino, decentralized in name only, because it's Fugazi. It's not real. With Bitcoin, it's proper decentralized, and I like to say you're either sort of pregnant or not, you're either decentralized or not. They like to go, well, no, bro, it's on a spectrum. And it's like, well, no, it's actually pointless. You might as well use a centralized database for everything other than money, which Bitcoin is, and nothing else can be. All right, so I'm kind of banging the drum here, but crypto is basically a game for insiders, and it's solutionism. There's no real problems. They really are just solutions desperately in search of a problem. You've always got to think about the token first, and I've actually spoken firsthand with these crypto grifters about how they try to design their entire offering. There was a crowd in Australia I interviewed where they were trying to create a decentralized Spotify and pay their artists in their made-up shitcoin audio. And would you believe it, but some of these artists did not want to accept their token, and they were much distressed about this. How are we going to design something that we can get our artists to take this token that we can manipulate? It's really Fiat 2.0 in the sense that the rich get richer, because most of them employ proof of stake as a consensus mechanism, and that's just how it works. And so, I just think ultimately crypto is unfair. Now, the exception I would say is stable coins. I know what's happening on Taro, that we can now have stable coins on Bitcoin. I know that there's stuff on Liquid. But right now, a lot of people can't ride the volatility of Bitcoin. And it's just it's really hard to say, but Tether on Tron is solving an actual problem for people, particularly in developing nations, who don't have the privilege of being able to get a US dollar bank account. And I get that, but I think within 5 years, a lot of this will have been solved in Bitcoin, and there'll be very little need for these blockchains. But that's what we're seeing in places like Lebanon and Turkey and Argentina, and we have to face the facts. As much as we don't like Justin Sun and Tron, that's just the reality. All right, so the bottom line is know what you own and why you own it. I think Bitcoin's value proposition really comes down to like one being an emergent store of value that's sucking monetary premium from $900 trillion worth of the global asset universe. And it's also as a censorship resistant. I think the total addressable market is north of $100 trillion out of, let's say, a $900 trillion pie. And then you compare that against crypto. I mean, combine, let's say you took the likes of Google and Apple and, at a couple $1 trillion each, how big can crypto be? I mean, let's be generous and say the next biggest crypto can be 5 trillion. Okay, Bitcoin will be 95% bigger than anything else ever. So I just think on a risk-adjusted basis, there's actually very little reason to be investing, from my perspective, in crypto, unless you're an insider. But we're seeing individuals, corporations, nation states all adopting Bitcoin, and ultimately everyone gets the price they deserve. I'll finish off with a quote from my man, Michael Saylor: "There's no second best," as Joe said early on. All right, that's me. Literally 2 seconds to go. Woo!
Give it up for Dale, that's fantastic. A good way to start the day. We're all roused up, we're all ready to go. Couple of quick announcements before I invite the next person onto the stage. Firstly, there is a braai this evening. I've no idea what a braai is, but apparently it's really popular in South Africa. So come on down, and there might be brandy, bowls, and braai, I'm told. Again, all 3 things I never thought I would say today or enjoy in South Africa. Is that right, Ricky? Brandy and braai, okay. So there's a QR code here for you to attend this brandy, braai, and bowls this evening. So yeah, get out your phone, scan that, and let them know you want to come. And the other announcement was in my phone. There is a very large funding announcement this evening. The funding will be in the rand? No, it's going to be in Bitcoin. It's definitely going to be in Bitcoin. Otherwise, Herman will throw me off the stage. But do stick around for that, as I know how much of this Bitcoin thing it is, and it's pretty interesting, and you're going to want to stick around for it.